Did you know that the average monthly rent for an apartment has been steadily climbing in recent years? It's become a significant chunk of many people's income, with the average person paying 30% of their income just to rent. And with the average monthly rent, $1,794, rent is continuing to go up. But what if I told you there's a way you could have your rent covered by investing? Intrigued? Well, you're about to discover exactly how this works. And you're not alone here. There's a reason why people like Warren Buffett love dividends. And can we blame him? They are the only thing that allows us to get a direct cash return on our investment, no matter what the market is doing. Now, as always, it is important to do your own due diligence. Before we jump into our list, let's take a moment to grasp the power of monthly dividend stocks. Imagine receiving a regular paycheck from your investments, not just once every few months, but every single month. That's the beauty of monthly dividend stocks. They offer a consistent income stream that aligns perfectly with your monthly expenses. But what exactly are dividend stocks? Well, let me break it down for you. Dividend stocks are shares of companies that, instead of reinvesting all their profits, choose to share a portion of those earnings with their shareholders. Think of it as your slice of the pie for being a part owner of the company. Now, here's where the magic comes in. While many dividend stocks pay out those slices every quarter, we're focusing on the monthly ones. These monthly dividend stocks offer you a steady, dependable income stream every single month. And that's music to the ears of anyone looking to cover regular expenses, like your rent. Imagine having your rent payment covered by these consistent payouts. It's like having a reliable tenant in your investment portfolio, paying its rent month after month. But how do we select these incredible income-generating stocks? Well, I'm going to share with you some of the best high-paying monthly dividend stocks. And again, as always, you need to do your own due diligence before buying anything. Ready? Let's go. Stock number 1, San Juan Basin Royalty Trust, ticker SJR. What's unique about SJR is that it operates as a depletion trust, specifically tied to fossil fuel reserves. This means that as these reserves are extracted and depleted over time, the trust receives a share of the production revenue. It's a way for investors to indirectly benefit from the energy sector without the direct operational involvement. Here's the kicker. SJR operates on a monthly dividend payment schedule. For income-focused investors, this steady stream of monthly cash flow could be quite appealing. Now, let's talk numbers. SJR boasts an impressive dividend yield of 9.05%. That's well above the average yield you might find in other income investments. This attractive yield has the potential to be a game changer for those seeking substantial income from their investments. To give you a clearer picture, SJR currently pays out a dividend of $0.34 per share. So if you hold a significant number of shares, those monthly dividend payments can really start to add up. Like all investments, there are risks involved. The energy market can be subject to fluctuations, impacting the royalty income generated. This, in turn, could affect the dividend payments to unit holders. It's essential to stay informed about the factors that might influence these payments. For example, a $10,000 investment would give you $1,331 a year, and the stock is up 85.27% the last 5 years. But remember, always do your own due diligence before buying anything. Now, before we move to the next section, make sure to hit that subscribe button and notification bell so you won't miss any of our other finance and investing videos. And if you like this video, make sure to hit that like button. Stock number 2, Apple Hospitality REIT, ticker APL. Apple Hospitality REIT brings a unique flavor to the table with its portfolio of 241 hotels across the United States. What sets it apart is its strategic partnership with two of the hospitality giants, Hilton Worldwide Holdings and Marriott International. This isn't your typical real estate investment trust, it's all about owning and operating upscale hotels. Now, what makes Apple Hospitality REIT particularly interesting is its smart focus on urban and suburban markets. Think about it. These locations cater to business travelers, making them more resilient in a rapidly changing travel landscape. Picture this. You're investing in a REIT that owns and operates properties under the trusted banners of Hilton and Marriott. These are names that people recognize and trust, and that could mean steady occupancy rates and a reliable income stream. But what about the juicy part? Apple Hospitality REIT boasts a current dividend yield of 7.4%. Now, that's something to raise an eyebrow for, right? We're talking about monthly dividends that come from the stable world of hospitality. While the stock market may sway, people will still need places to stay. For example, a $10,000 investment at this rate would pay $740 a year and is down 9.5% in the past 5 years. Always do your own due diligence before buying anything. Stock number 3, Realty Income, ticker O. This company isn't just a monthly dividend payer, it's practically the king of them. With its trademark slogan, the monthly dividend company Realty Income has been capturing the hearts of income investors for years. Realty Income Corporation is a real estate investment trust specializing in the acquisition of standalone, single-tenant commercial properties located in the United States, Spain, and the United Kingdom. These properties operate under NNN leases, offering a unique investment approach. The company is incorporated in Maryland and is headquartered in San Diego, California. What sets Realty Income apart? There's some fresh excitement in the air. Realty Income recently welcomed a new CEO, Sumit Roy, who's got real estate coursing through his veins. With a diversified tenant portfolio featuring big names like Walgreens Boots Alliance and 7-Eleven, you've got solid anchors supporting that monthly income stream. But wait, there's more. When it comes to safety, Realty Income is like your financial bodyguard. With a juicy yield of 5.18% and those monthly payouts, it's like clockwork you can trust. For example, a $10,000 investment at this rate would pay $518 a year and is up 10% in the past year. Stock number 4, SL Green, ticker SLG. When it comes to prime office real estate, few places can rival the heart of the Big Apple. SL Green has firmly established itself as a significant player in this prestigious market, with a market cap of $1.7 billion and a yield of 10.6%. SL Green's promise lies in the iconic skyline of New York City. Sure, the landscape of office space is changing and remote work is making its mark, but don't count out the allure of the concrete jungle just yet. As the city redefines itself and businesses adapt to new ways of working, SL Green could be well positioned to capitalize on potential opportunities. For example, a $10,000 investment at this rate would pay $1,060 a year and is up 77% in the past. Stock number 5, Stag Industrial, ticker STAG. Next up on our income journey, we have Stag Industrial, a REIT that's got its sights set on industrial properties and warehouses. In the era of e-commerce dominance, these are the spaces that are fueling the logistics of our online shopping addiction, boosting a 4.09% dividend yield as well. Year. With the rise of e-commerce and the increasing demand for efficient warehousing, Stag Industrial finds itself right in the sweet spot. Its strategic focus has paid off, making it a strong performer in a rapidly evolving market. Looking ahead, Stag Industrial's growth prospects could be as sturdy as the steel beams that hold up its warehouses. As more and more retailers adapt to the digital age, the need for modern, well-located industrial spaces continues to rise. For example, a $10,000 investment at this rate would pay $410 a year and is up 30% in the past 5 years. Always do your own due diligence before buying anything. Stock number 6, AGNC Investment, ticker AGNC. And now let's talk about a different kind of REIT, a GNC investment. This isn't your typical real estate ownership play. AGNC specializes in agency-backed residential mortgages, a unique twist that sets it apart from the crowd. One thing to keep in mind with a GNC is that its dividend isn't set in stone. As a mortgage REIT, its payout can vary based on economic conditions and interest rate movements. It's like riding the waves of the mortgage market. But what's the hook? How about a whopping 14.1% dividend yield? Yes, you heard that right. For income-focused investors willing to navigate the ever-changing waters of the mortgage landscape, a GNC investment could offer some enticing rewards. For example, a $10,000 investment at this rate would pay $1,410 a year and up 3% in the past year. Gladstone Investment Corporation, categorized as a business development company, operates as a private equity fund specializing in the acquisition of well-established, lower middle market companies. These companies typically generate revenue ranging from $20 to $100 million, exhibit favorable fundamental characteristics, and are led by capable management teams. Established in 2005, Gladstone Investment Corporation emerged as an externally managed business development company, specializing in extending equity and secured debt financing to small private enterprises. Diverging from the conventional BDC model focused on loan-based investments, Gladstone Investment carves a unique path by allocating roughly a third of its portfolio to equity securities. This strategic move positions the small-cap BDC to capture greater potential in management buyout transactions it actively supports. Although equity investments inherently carry higher risk, the foundation of Gladstone Investment's monthly dividend stems from the interest income generated by its loan portfolio. Notably, this loan portfolio predominantly comprises first lien secured debt, affording the BDC priority repayment in the event of borrower default, boasting an annual dividend rate of 7.22% and an uninterrupted dividend stream of 12 years. There's a lot to be excited about. It's important for investors to recognize that Gladstone Investment's portfolio encompasses approximately 25 companies, spanning just over a dozen industries. This relatively concentrated exposure offers a distinct risk profile compared to its counterparts, with potentially narrower diversification. Nevertheless, the management team at Gladstone Investment Corporation actively engages on the boards of its portfolio companies, leveraging their expertise to catalyze value creation. Guided by a steadfast commitment to the long-term perspective, the company has strategically invested in fewer than 60 enterprises since its initial public offering in 2005. Central to its strategy, Gladstone Investment's leadership targets well-established, cash flow positive businesses, prioritizing them over early-stage ventures. This discerning approach aligns with the company's emphasis on minimizing risk. Notably, the BDC operates with a cautious approach to leverage, maintaining relatively low levels to enhance its risk mitigation strategies. Intriguingly, despite its smaller scale and a heightened proportion of equity holdings, Gladstone Investment has demonstrated its prowess as one of the finest managed BDCs in the industry. This is evidenced by its robust performance track record, which attests to the company's ability to generate consistent value over time. For example, a $10,000 investment at this rate would pay $722 a year and is up 1% in the past year. As we wrap up our exploration of these diverse investment options, it's important to remember that making informed investment decisions requires careful consideration and research. Each of these stocks and investment opportunities has its own unique characteristics and risks, Before taking any action, take the time to thoroughly research and evaluate your investment goals, risk tolerance, and financial situation. However, it's crucial to emphasize that the information presented here is for educational purposes only and should not be construed as financial advice. We are not financial advisors, and any decisions you make based on this content are your own responsibility. Before making any investment decisions, it's highly recommended to consult with a qualified financial advisor. We appreciate you joining us today to explore these potential investment opportunities. Again, make sure to hit that subscribe button and hit that like button if you like this video. See you in the next one.